Hi, this is George. In this video, we are going to see about Nifty Expiry Day strategy with no adjustment. This is a complex strategy, which is a 8 leg strategy. So the margin required for this is around 8 lakhs. So when we say 8 legs, you might be like feeling it will be a very big strategy, but it is actually not that complicated as it sounds, because in that 8 legs, 4 legs will be on strangle, where we'll be like selling on both side a call and put with protection of 100 points, where the premium difference we find is around 5. I'll show those things with an example, but for now we need to know like it will be like 4 legs on strangle with 20 lots buy sell on both sides. The other 4 legs will be, one will be on buying a synthetic future with a protection of 50 points, or selling a future with a protection of 50 points. So synthetic future is nothing but similar to future in terms of payoff chart, but instead of future we'll be using options. That is like if you want to buy a future, we'll be buying a ATM call and selling a ATM put. And when I say like with protection, if you are buying a future, you will be protecting it by buying a put option. If you are selling a future, you will be protecting it by buying a call option. So this is done for a manual backtesting for 12 weeks on expiry days, which I will be posting in the next slide. This will have absolutely no adjustment, so it is very much suitable for working professionals and part-time traders. And in this strategy, only thing is like if our MTM, that is P&L, shows minus 20,000 loss, then we'll be booking the loss, or else we'll wait till market at 3 p.m. to book the profit. I usually close everything by 3 p.m. Disclaimer, this is only for education purposes. Please do your research before taking any trade. This is not a recommendation, but just my view. So I'll just show you how the strategy is built. As I said before, this needs a capital of like margin of 8 lakhs. So if you see the last 4 of these things, this is nothing but a triangle where market is now 17,150. We are taking at 17,350 call we are selling, 17,450 call we are buying, 16,950 put we are selling, and 16,850 put we are buying, 20 lots, so 1,000 quantities. And synthetic future, actually it is 17,150. So here we are buying a future. So 17,150 call option, 1 lot we are buying. So it is 50. Let me say why it is 100. It is 50 here, and selling same 17,150 put here with the protection of 1,700 put call option. Put option we are buying. And in one side, as we are like buying the synthetic future, the other side we are going to sell the future. For this, we are protecting it by buying a call option, which is this one. So the quantity is becoming 100. So now this becomes a 8 leg strategy. Now we will see for the last few months, that is from January, I would say. So first expiry on January is 6th of January. I have done all the like groundwork on doing these things because I don't want to spend time here and putting all those things together. You can see like here I have bought a synthetic future. So I would have sold a future, and other things are the strangle. Once you build this strategy, you will have a payoff graph something like this. Like it will be like in the green zone here, and it will be going to red zone, and there will be a M zone of profit, and then a big red zone and a full profit zone. So this M zone itself is like 17,530 to 17,850. It's like 300 points gap will be there. So it is a good zone. Actually, market doesn't usually move that violent on expiry days, what I believe. That's what the data says. So I'm trying to do this strategy. With this, you cannot see the break even might not be like correct in this case with Opstra, because when we use a futures in this, the break-even point is absolutely not correct in Opstra. So, but the graph will give you the right data. You can rely on the graph rather than on the numbers given in this. Now, so 9:30 we have started with this trade. Let's see where it goes. So you can see the vertical line, which is where the market is, the dotted line, green line. Though market is going on one side also, we don't see any loss here for now. See, it is like almost breaching the break even. Still, we are like having a profit here. So by 3 o'clock we have booked profit of 9,340. So that's what I have given here. So the premium difference we always cover is 5 points. Usually, generally, strike difference can be anything as per where we are getting the premium difference. I'll just show you here. So premium difference is what I mean for the strangle. So here, if you see almost 8 rupees 65 paise and 2 rupees, it's 5 rupees difference. Here also 5 rupees difference. So I have given us 5 rupees difference. It's like 17,700 is the strike, 17,700 to 17,850 is 150. 17,700 to 17,550 where we are taking the strangle, the strike difference is 150. So this can differ, and this we try to keep it at 5 rupees. Maybe some places, see, even when we go 300 points when we are getting 7.5, then we take this. Here we are might have taken 6 because if we go little more inside, like when we can't take like 50 or 100 points strike difference, and in that case the premium might be like little more also. So that is why I have taken this. This will be ideal. You can see, like, always see premium difference of 5 if you get somewhere around 150 points, or if it is more, it is well and good as well. So we are booking profit in the first case. Let's see the next case. So here for 13th Jan again, you can say the same setup here. So let's go on with this. You can just see this at your, like, you can pause the video and you can see this. I'll just go to the MTM thing. So keep looking at the PNL MTM. Though market is going, we are not having any loss. So 3 o'clock we are booking profit of 6,120. Then next week, which is 20th of Jan, I've already done the setup as in previous videos, previous week. So in this case, let's see where it is going. So here only we have started seeing a loss in PNL, but still we are in the profitable zone only, so we no need to panic. But here we are seeing like we are having a very big loss. Okay, so from this point of time, let's be a little cautious. Okay, so our PNL stop loss has hit. So I would have given us, we are booking loss of 20,000. But actually here, if you see, it has become 25, but still if you have kept a portfolio stop loss of 20,000, then you would have ended up with only 20,000 loss. Let's see where it would have taken us. See, by 2 o'clock it was like 37,000. So that's why I'm saying, like, if it reaches 20,000, let's book loss. Let's see where it has went. If it is, we are waiting till 3 o'clock. It would have only like loss of 8,300, but still we are not interested in that. Even if we waited till 3:15, we would have ended up in profit, but that is not this system trading is. So we are booking loss in this case. That's what I have given in this slide as well. We are booking loss of 20,000. Now let's see the other case on 27th of January. In this case again, starting only we are having a very good profit of 7,000, 8,000. If you want, we can book that as well, 9,000. If you feel like you're getting 10,000 profit, and if you don't want to spend time also, you can just like close the trade. Or if you feel like market might reverse and you might go little down on your profit, that time also you can close. But for now, I'm just showing you what it happens at 3 o'clock. 3 o'clock we're ending profit of 9,990. Then let us see one or two more examples. I just don't want to see all the examples. So 3rd February, let's see where it is. We are seeing loss, but still we are in the profitable zone, so no need to worry. Though it is almost breaching, still our loss is not that big. By 3 o'clock we are getting 4,400. Okay, so I don't want to explain all the cases. I'll just show you one simple way where I can actually tell you. So we saw like last, what did we see? 3rd of February, so 10th of February. So this is open price, high, low, and close. So this is open, this is high and low. So if you see, the difference between high and low is only 200 points. And in the slide, we can see like we would have taken 150 200 points, and other cases like 200 300 200. So in this only you can just check on for the 10th of February the difference between is only 200, and we have a range more than that, so we'll be in profitable only, no need to worry. And 17th February also, like only 200 is the range, so we should be in profitable zone. 24th February, that was the bloodbath day, like the Russian-Ukraine war came. It was ending the previous day at 17,063 and starting at 16,540 and ending at. So we will come to this again. I'll show this on even that day we made profit. Actually, I'll show you that. But we'll see other things in this way. So here again only 300 points, so we'll be in profitable zone. 10th of March again 300 points, we'll be in profitable zone. 17th of March 200 points only, will be in profitable zone. 24th of March 200 points will be in profitable zone. So we are in profitable zone only in almost all the cases. 24th February, I'll just take a stab on this. So here if you see the mark, I have taken these things. So we'll just see how the MTM moves. So even when we are in profitable zone, because of the high volatility, we were in loss only actually in the beginning, but once at time goes, we started to have profits. And though market is like moving, we have taken 16,650 and now it is 16,480, almost 200 points it has moved. Still we are in profit. It is keep on going in the downside, we are in profit. 407 still in profit. 308 still in profit, and we are booking at 8770. So even though market had moved violently from 16,650 to 16,300, which is like 350 points move, still we were in profit. So that is the strength of the strategy, and I'll just show you the summary of this. Out of the 12 weeks that I have backtested, 11 weeks were in profit except for this 1 week. So 92% of probability is there. Overall profit is 77,000, and the margin used is 8 lakh. So we are almost getting 10% in 12 weeks time. Whereas in FD or other cases, you will see like for a whole year we'll get 5-6% hardly. So average profit or loss per week is 6,500 almost. Now I'll just show you the raw data that I have. This might not look pretty, but please bear with me. So in this case, if you see last 2 months, starting from February, if I have given you this same backtesting results, it would have given me 72,000 profit, and I could have told like 100% profit. But I thought like let me take 1 more month so that I will see at least 1 loss, so that it would be like genuine as well. Maybe if I have taken 1 or 2 more months, it might have been little more loss also, but I'm fine with that. But all I want to say is like there is no strategy which has 100% of probability, and I totally believe in that. That is the reason I will see where the loss will be and how to protect the loss. And that is when I came like, okay, we will put a stop loss of 20,000. So whenever we backtest, we should have a strategy that when we going on a loss, where should we end up the loss. So that is the reason I have taken the 12 weeks, or else I would have easily showed the data for 2 months and I would have told like 100% profit. And then coming to the last part of this thing, so this is just the way I wanted to do. So I have taken these strike difference and these premium difference. So if you want to backtest, you can try with different premium difference. You can take like for premium difference of 10 rupees, which will be more riskier. So strike price will be lesser, but you might end up in more profit maybe. And if you are a little more conservative, you can take a premium difference of less than 5 also. It's totally up to you. You can try different strategy, like instead of this 8 lakh strategy, you can take with only strangles, which is the usual strategy that people do. But in the case of strangles, if you see the diagram, payoff diagram will be like kind of a rectangle area where you'll be profitable. But in that case, if there is a swing in either of the direction, your MTM will be like giving you headache. So better don't do that. And also with only futures without a protection, I generally don't do that. That also can be done. And also just by buying a call or put instead of futures, that also can be done. But I feel this way is better for my way of trade and my risk appetite and my work schedule. So out of these 12 weeks, if you can see like only 1 week when the loss is going, I was like, I have to look at the monitor for some time, or else I'll be like usually carrying out my work and in other screen maybe like the mobile portal, like I'll be just opening my app and see where is my P&L, and I can just work on what I have to do on my daily basis. So this way we can make money while we are doing focused on other things as well. So in next video I'll be talking about bank Nifty expiry strategy on the same. Thank you.